Hey, I'm Michael. Welcome back to another video. In today's video, I run through my 12 holdings of my ASX portfolio, and we're going to talk about what I plan to do with this portfolio because I think it's time for a restructure, and I tell you exactly why. But before we go into the video, quick disclaimer, we talk about my individual holdings. So this is not financial advice, and I do not hold a financial services license. I'm just sharing my opinion, my personal portfolio. This should not be advice for you to act on any of the things that I say in this video. So yeah, let's jump right into it and start with the restructure that I'm planning. Let's share the screen. So the ASX portfolio restructure. What is my plan? I want to do a couple of things with my portfolio. At the moment, I'm holding 12 individual companies in my portfolio. And these are all just in Australia. And I'm holding this portfolio in Australia as well. So the focus definitely should stay in Australia. I want to make sure I have a good exposure in Australia because this is a country where I live and where I love to grow a good portfolio. This is compared to the other portfolio I have where I hold individual international companies. And I want to get away from having 12 holdings, individuals, and I want to reduce the number of holdings that I have to just 3 to 5 companies. So reducing the numbers of companies that I have. And I want to do that in an organized fashion. So I don't do that now straight away. So I'm not going to sell everything and then I'm going to choose new companies that I want to invest in, but I want to do that gradually. And another thing that I want to do, I want to have also one ETF in my portfolio. So 1/3 of my portfolio should be in an ETF. It should be a high growth ETF. That means it comes with high risk as well. But I want to make sure that this will be a high growth portfolio. But with that ETF, I want to have a little bit diversification. Not through sectors, not necessarily, but through a different and right range of companies. And 2/3 of the portfolio will be in individual stocks and individual investments. And I want to take more consideration when I start investing. In the past, I've done my research and I thought, okay, that might be a great investment. But if I now find an investment, this really needs to be future-proofed. I want to make sure that I invest in something that excites me, that I really think will work out well in the future. Of course, I don't know what the future will bring, but I want to invest in companies where I'm really excited to see how they grow. And I want to invest in companies that have the potential to perform extremely well. That might be 10x or more over a number of years. Of course, not within a year. Of course, it's great if we have another company like Afterpay, but I'm sure that this might not happen, but I wanna look out for those type of investments. And I want to do that with finding companies that are in disrupting the way they work. They disrupting a technology, that disrupting a way things work at the moment. And yes, that's not easy to find, but leave your comments if you think you know a company that does something totally different and that is one of those future companies that I am looking forward to. So leave a comment if you think you know a company that works really well, and we have a look into that in maybe another video as well. And we have a look together on what that company does and what we think the future of that company could look like. So recapping, just Australia, 1/3 ETF, 2/3 individual companies, around 3 to 5 individual companies, and one high growth, high risk ETF. And again, I'm not changing that from one day to the other, but I do that gradually over time. And yes, while this is a massive project, we obviously want to see what the companies are at the moment that I'm holding. Maybe there are already some companies in there that are future-proofed and that will do very well in the future. And again, let me know if the companies that I will present to you now that are in my current portfolio, if you think those will do very well in the future, if you believe they can perform well. Or if you think, wow, what a crap company, why is that in your portfolio? And we have a discussion what we're going to do with them. And I'm going to share my opinion about all those stocks. So really quickly run through my 12 holdings of the ASX portfolio. And I make it full screen now so that we can see everything in detail. So the first holding I have is Altium. I bought into Altium not too long ago, in October last year. And obviously it's not performing too well. It's a software company. And I believe that Altium can do very well over the long term. It's a very established, they have a very established product. It's utilized for engineering companies to produce models and so on. But the recent time wasn't as well for Altium, and they have done not so well over the last couple of months. Long term, I believe it's a good investment. However, is it really a company that can 10x over the next 5, 6, or 10 years? I'm not sure. ASX, that's obviously a company very established and has done very well in the past. First time I bought into the stock was in June 2018. I've sold out of that position at some stage, took some profits, and I reinvested again at some point. So I'm actually in the green when you see the entire investments, but in my current position, I'm in the red. CSL, same story here. Purchased this the first time in June 2018, and I think it's a great company, but the growth obviously has slowed down over the last 2 years maybe. And I'm still in the green, and I took some profits at some point. Yeah, so we'll see. Those are two companies that I might want to replace or sell out over the next time. Fisher & Paykel is the next one on the list. Pretty good performer. It got down a little bit, but I think Fisher & Paykel is something that I want to hold on to a little bit longer. I think the company is doing exceptionally well. Really good company, established business model. And so, yeah. Another one that I definitely want to hold on to for a while. Great financials and a good business model. And I think there is still the future, a good and bright future for Jumbo Interactive. And got into the stock in January 2020. Actually purchased a little bit more at some point this year when the price got down a little bit more. And so therefore I'm in the green with about 15% on that stock. Macquarie Group, one of the greatest banks in Australia. First purchase in October 2019. Again, took some profits at some point. And you see they had that jumped in share price today. I'm recording that video on the 9th of February. And that was because they released their numbers for this year, and they're actually doing very well in their investment section. And so the share price jumped by over 6% today. So that's actually pretty good to see. And yeah, stable business. Obviously not a company that is a high growth company, but a very established bank. So one really good business. Another company that I really like, Megaport, purchased into the stock first time in September 2020. Obviously has done very, very well over the last number of years. The last year is probably not so good. Actually, you would have expected more from the company when you see the competitors overseas that do similar things. They have done better. And I think one of the products that has not taken up yet, which I expect will come in the future, is edge computing, for networking. So I think it has not taken up yet, but I believe that will be a future product that Megaport will do very well with. Mighty Craft, that was a purchase, I think, and I need to turn on the camera now so that you see my face impression. This obviously was a purchase from my heart. It is a company that has part ownership in breweries here in Australia, and I'm a fan of craft beer here in Australia. So I'm actually, it's definitely not an investment that I made because I knew it will do very well, and I think I believe you usually should take out your emotions of your investment, and I think this certainly was an emotional purchase, and so we definitely need to think about what we're going to do with that position. I think it has to go if we want to make sure that we have a high growth portfolio. It's just a very, very small company. I believe the company will actually do very well over the long term, but I'm looking for other companies that actually change the world, that will have future-proof products and are more, they just have more growth potential. And I should have shared it here. No? So this is Megaport, Mighty Craft, which I just talked about, and they called Founders First just until a couple of months ago. They renamed themselves. And the last 4 positions is Self-Wealth. I think that's one of the upcoming brokers, and I'm using Self-Wealth myself. And I believe there is a good chance that company will do even better over the next number of years. It has obviously done exceptional in 2020. It was down to a share price from, I think, around 15 to 20 cents last year. And it basically tripled in 2020, which is amazing to see. I'm following that company already for much longer, but missed my chance to invest in it early enough. Then Volpara Health Technology. It's a company that I'm following already for some time, and I believe they have some great potential. But again, not sure if the returns can be as good as I would hope they can be over the long term. A company that I definitely think will be a slow grower over the next number of years. I have done definitely well with that stock, knowing that I'm not even investing for a year, 22%. Performance gain was just a good timing to buy into the stock, but Webjet is obviously, I believe that it will be hard for travel stocks to actually go back to where they were before the pandemic, and I think that will just take a lot of time. While I think Webjet is definitely in a good position, it will just take very long until they are back there where they were. And the last one, which is my best performer in my portfolio, is Xero Limited. Xero is a New Zealand company. They have a software as a service for accounting software. This is one of the companies that definitely don't sell out that quickly. I believe it's a future-proof product, and I think it actually will do really, really well over the next number of years. And now, last, we compare what my performance was compared to the ASX. And you might have seen it already because I scrolled down a little bit too far. But let's jump right into the screen again, onto the screen. We see my portfolio did not too bad over the last 12 months, 8% gain. Also not skyrocketing, but definitely good compared to the ASX 200, which is still, when you see it, the performance over the last 12 months is still in the red. So I have done quite okay with my portfolio and performance, but I think it is definitely time to do something with my portfolio, to invest more into individual companies where I really know that they have a great future product. And again, companies that really excite me for the future. And I want to stay around companies that are in that disruptive, innovative segment. I'm gonna tell more about companies that I might add to the company, and I take you on that journey of recreating and restructuring my portfolio. Please leave a comment if you wanna say something about my portfolio. And again, this is just my portfolio, my own investment decision. You should not act on any of the information I just shared. Thanks for watching the video, and I hope it was interesting to you. I'm gonna catch you in the next one. Until then, bye.